Good morning, everyone. Morning. Happy Thursday. Happy CPI day. Today is Thursday, October 12th, and we got the CPI report that came out today in the morning. And as a lot of people were expecting, the CPI data, the inflation data, right, the consumer price index came out a little higher than the expected, but in line with the prior figures. So the U.S. CPI year over year was expected at 3.6%. The prior was 3.7%, and we got 3.7%, just like the PPI that came out yesterday, slightly hotter than expected, and markets pulled down a little from that overnight high. Now, we also had the CPI month over month at 0.3% expected, 0.6 from the prior, and it came out at 0.4%. So again, a little higher. Now the core CPI data year over year and month over month came in line with expectations. The year over year 4.1% expected, in line with that, and the prior 4.3%, so a slight decrease in that. And then the core month over month 0.3% across the board. So inflation slightly higher here than expected, in line with the prior months year over year data. And what we got from that was a little pull down in the markets, right? Markets are not generally too phased about this. We were trading about like 28 on the S&P 500 before the event actually came out, and we dropped about 20 handles, right? 20 handles on the drop, which, okay, that's a decent bit, but overall, the movement and the aggression wasn't too hard on the sell side after that data came out a little higher than expected. So we're in a situation right now in the market where we've seen constant bullish behavior over the past few days, and we've seen just continued upside. So yesterday's run into the close of the session, right? A lot of people were alluding to, oh, maybe the CPI figures were leaked. I don't necessarily think that was the case, right? I think it was just a fill of stops, right? Back and fill and then continue to the upside before we got this report that'll mellow things out, right? There could be a little more downside on the day, and we'll talk about those levels and areas on the S&P 500 futures after we go through a little bit of news. So there's still very low probabilities that the Fed is going to be hiking at all for the remainder of the year, even with the CPI data print. It doesn't seem like that likelihood is very high, right? It's dropped off significantly from a month ago, even, right? That time at that point. So Fed's looking to ease off and start a no hike cycle, which could travel into the first and second quarter of 2024 before any real anticipation of rate cuts is to be talked about, right, and presented. We'll see how markets navigate that situation. So we also have news about the strike, right? The auto workers strike. The UAW announced that 8,700 members at Ford's Kentucky truck plant have joined the picket lines as talks failed to progress. So the plant, which builds the Ford F-Series Super Duty, Ford Expedition, and the Lincoln Navigator, is Ford's largest in terms of employment and revenue. Ford called the UAW's decision grossly irresponsible, but unsurprising, the automaker reiterated that its offer makes a meaningful positive difference in the quality of life for its 57,000 UAW represented workers. In terms of the bigger picture, the strike has sparked widespread layoffs. GM, General Motor, Ford, and Stellantis laid off 4.8 thousand workers at factories not included in the strike, blaming a chain reaction in the manufacturing and supplier network, while analysts have called the layoffs a simple reality due to the impact of loss of production. And the UAW contended that the job cuts were aimed at pressuring the UAW members to accept a less favorable contract term. Excuse me. So, jeez. Excuse me. So these jobs, these layoffs and these job cuts were not necessarily reflected in the last non-farm figure that we had, and we'll most likely see them in the coming figure and into the end of the year in that end of quarter. So that could really shift things, because remember, the jobs number last time that was presented, a lot of those jobs that were added were part-time workers. So when the UAW strike began, Deutsche Bank estimated that a full strike would hit the Detroit Three's earnings by about 400 to 500 million per each week loss of production. Right. So investing group leader David Dalton Clark believes a deal in the UAW's favor would drain Ford's coffers. So I see for dividend being cut and the stock price plummeting 36% to $8 before too long, right? This is what he warned. Singular Research said that GM and Ford will likely see a 1% contraction in profit margins, assuming a 30% increase in labor costs over 4 years. So in Canada, GM and Canadian auto workers struck a tentative labor deal shortly after the strike was initiated at 3 of the automakers' facilities. The news came days after Canadian trade union Unifor reached a labor contract with Ford. Meanwhile, over in Hollywood, negotiations between studios and actors broke down after the two sides failed to agree on the TRA's latest proposal, right? So that's something that I wasn't really aware of, right? I was more focused on the auto workers. In terms of taxes, right? This is another thing that pops up. Microsoft drops 0.4% after hours on Wednesday after the tech giant disclosed a notice from Internal Revenue Services, which said that it owned, this is a crazy number, it owned nearly $29 billion in back taxes plus interest and fines for the tax years of 2004 to 2013. The issue pertains to a practice of transfer pricing and generally used by companies to reduce their tax burden by shifting profits to tax havens. We disagree with the proposed adjustments and will vigorously contest the NOPAs through the IRS Administrative Appeals Office and, if necessary, judicial proceedings, said Microsoft. The company does not expect a final resolution in the next 12 months. So looking at this, right, massive tax burden, and Microsoft dropping about like half a percentage point just from that news, right, doesn't necessarily affect it too much. So we have some other news here. China's sovereign wealth fund, Central Huijin Investment, marginally raised its stake in the country's 4 biggest banks for the first time since 2015, including the Bank of China. And the move rekindled some hopes that the Chinese authorities will step in to prop up the stock market amid the exodus of global funds. Note that Beijing is weighing fresh economic stimulus and may raise its 2023 budget deficit by issuing additional sovereign debt. So Huijin's modest yet symbolic investment are likely aimed at supporting share prices, said Redmond Wong, a market strategist, Saxo Capital Markets. So that's the news for this morning, right? This inflation data is still kind of weighing in on the downside in the equity market right now. We're down slightly from the overnight highs. We're below yesterday's open as well, as we're back navigating into the low teens on the S&P 500 futures. The way I see it is that if we're below the 44.20, the sell side's pretty happy about that, right? So buyers really need to break through that area. There was a lot of delta that traded there. A lot of sellers that actually opened positions there yesterday into the close of the session. So any movement back above that, you get that spring that'll probably bring us into that high 30 or low 40 to the upside. I think that's a very strong ultimate target. I wouldn't be surprised to see some kind of downside pressure on the session today based on this data, right? We'll see how the open shapes up. But especially if we start breaking back under this 44.05 region, I think that the sell side opens up pretty harshly. Anything under 43.93, that's a big sell wave. I understand this is very far away, but right now, as it seems, the sell side is really operating on this news, and it's really pushing things lower. So I'm going to be very cautious with the buy side. We've had a very extended move, and we could see this pullback rise for today and tomorrow as we start seeing profit taking and fair value balance in this market. So with that being said, right, we're going to open up our live trading room right now with our futures traders. I'll see you guys in there. We'll do this again tomorrow to wrap up the week. And remember, tomorrow's Friday 13th. Spooky stuff. Hey, Ivan. Hope you're doing well. Hello from Bulgaria. And I hope everyone has a great trading day. Check out community.tradeproacademy.com for our Discord. And I'll see you guys tomorrow to see what kind of news we get and what kind of movement we have on today's session. So thanks for watching and chat soon.